Yo, I said I was going to be doing a bunch of videos. This will be going over market profile. I'll be going over a bunch of different advanced topics: delta, open interest, net longs, net shorts. Different. I'm basically just going to be going over how to get the sentiment of the market so we can all hop it on the right direction, not the wrong one. And we can place our trades smarter, better, and get that money. Know what I mean? All right, let's hop into it. So, what is market profile? Market profile is just a different way of looking at the market. We all look at the market in some kind of way, shape, or form, fashion, whatever the hell. Some people like looking at candlesticks. Some people like looking at boxes. Some people like just looking at the volume. I like looking at everything. Typically, me per se, I don't look at candlestick charts as much, but I do like. I mean, I'll get more into that later on. Just because of the platform that I'm using, I don't really need to. But sometimes I still do look at candlesticks, and you should because it'll just give you more confidence in your trade. But anyway, market profile is just another different way of looking at the market, and I'm gonna show what exactly is market profile here in a second. After I'm just gonna go over a little bit of basic stuff. So why should you trade market profile? You should trade market profile if you wanna know the direction the market is going. I should say that better. If you want to have a more of an understanding of why the market is going in a certain direction versus just because we all see the candlesticks, but a lot of people don't view the candlesticks correctly. A lot of people view candlesticks as what they just it's candlesticks because this is how it's talked about. It's just candlesticks on a chart. Nothing special about it. You see a bunch of candlesticks. All right, put your trade there. And a lot of people don't. Some people don't even put their trades there. But market profile, however, you see it distributes the information in a way the human mind can actually. What's the word I'm trying to look for? Understand? Yeah, we'll go with that one. Understand it. It's just a certain distribution of information. It's easier for the mind to actually process it in that kind of view versus a candlestick. And that's why you should trade market profile. If for some reason you just don't like candlesticks and you do have a lot of knowledge in the market, I would say maybe try something out. But of course, back test. Go ahead and try to form your own strategy. Don't use live money. And maybe try market profile out because it'll probably help you out because you're just probably a discretionary trader. Why you shouldn't trade market profile? Honestly, I can't come up with a good reason to not trade it. Honestly, a lot of the big timers are using market profile, especially like in the stock market. I only trade crypto as of right now, and I don't think there's a lot of videos on market profile when it comes to crypto. Most of it's towards forex. And that being said, if you just don't have, I should say, okay, if you don't have a basic understanding of market profile, I'm not market profile, of trading in general. If you don't have a good understanding of trading in general, I would say, okay, maybe you shouldn't hop in a market profile. Should jump into the basics of just the basics of everything, like the bid and the ask, imbalances, auction, response, initiation, all these different terms. You should go ahead and hop into that. Because if you don't know that, then I don't think you really should be even looking at the candlestick charts as of. Oh, you can, but that's just my opinion. Take that with a grain of salt. Advantages, kind of went over the advantages already. Disadvantages. The disadvantage is the same thing as a candlestick chart. Like, you're only looking at time when it comes to market profile. Now, that disadvantage also is an advantage because when you add this to, like, say a volume profile, or you add different indicators, advanced indicators that actually show you the sentiment of the market, not RSI or MACD, then you can usually hop on. You have a better chance of hopping in the right direction of the market, which is what we always want to do. Because if you just started trading, or you're just in your first year of trading, or whatever you're at some point we've all put a trade, and that just went the other direction. You just like, whoop, what the hell? Like, yeah, that's happened to everybody. However, with this, it's easier for you to avoid those kind of situations because it makes you ask that question. All right, why? Why is this moving this way? Why you go up? Why you go down? You're gonna ask those questions and you're gonna have to figure out the answer. When you get that answer though, you get what we love to have in the market, which is confidence. And if you're wrong, guess what? Write it down in your logbook, scratch that out, and you just learn a new lesson. Alright, the platform I'm going to be using is going to be ExoCharts. There's several different platforms you can use. ExoChart isn't like the one all be all. It's just for my tastes, my purposes, ExoChart fits the bill for me currently. I'd rather spend $40 on ExoCharts versus the same amount of money on like TradingView or something like that, and they're it isn't the best. Yeah, their stuff isn't the best when it comes to stuff like market profile. But there's also Sierra Chart and there's also like Quantum Tower. I've I've looked at a little bit of their stuff. It seems to be pretty legit. Also, they're not just focused to crypto like ExoChart is. So if you're someone that trades things like forex, I don't know if they do it or not. I know they do stocks. I know Sierra does forex. I don't know about Quantum Tower. I didn't check that. But if you trade other things other than crypto, I mean that could be a route because then you could just get, boom, 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 more than one, two for one, real quick. You know what I mean? All right, this is just a quote. Jim Dalton, Godfather, the one all be all, the man himself, the legend of market profile. Price advertises, time regulates, and volume confirms or rejects. Oh, that is the quote. Because it's so true. Price advertises, you see $2, I buy for $2. Why I buy for $2? Well, at this time, it spent a lot of time at $2. I know that's a good point of control right there. Everybody else buying for $2. Okay, I buy for $2 there. I know sell for $2. I know short. I buy. See, that's exactly legit what that means. Price advertises, time regulates, volume confirms. We look at the price. The price is shown to us. We see how long it's been at this price. Is it a key level? Is it interesting to not just you but multiple people? And how many people are actually looking at it? And what side of the market are they on? We want the most liquid price at the right direction. That is the game. This is that word I was talking about, discretionary trading. And that's legit what market profile is. You become a discretionary trader when you start using market profile just because you're so open to so many different possibilities. It's like price action, but if price action started doing like cocaine and then it just had it's pretty dope. I don't think that was a good analogy, but whatever. I tried. Discretionary trading. I'm gonna go over like all these. I'm just gonna read this over, but it's better if I show this with an actual chart because if I just read this, like, okay, what is this? If you don't know, you don't really know a lot about this already. So discretionary trading. I wrote this twice. Control. Identify the stronger side of the action. The regime. Rotational or directional. Potential. Balance or imbalance. So what does all that mean? I mean, I said I was just going to read over real quick, but I'm going to go over at least that part real quick, okay? All right, control. Identify the stronger side of the market. Oh my gosh, this is what you should be doing before you come into a trade. You remember that guy that said, okay, I start on the daily and then I go down into the whatever time frame I want to trade in? Yeah, that's legit what you do with market profile. You identify who's in control. Is the market in a downtrend or is it an uptrend? What Who's the stronger part? Like who's strong right now? Is it the sellers? Is it the bidders? Who got the reins right now? And then regime. Rotational directional is so important, especially in the crypto market, because it also depends if you're a day trader or swing trader. Intraday trading, like if it's like if you're in a rotational day and you think this is a directional day and you expect the price to keep on going because you think, all right, this dude about to explode out of here. Well, guess what? It don't, and then you probably go back to the point of control, and then that $100, $1,000, $50,000 trade you just made just turn back into either your end profit or now you're at the downside. But it's a rotational day, but you get scared out of the trade, or you get stopped out if you have your stop loss so close, a very tight stop loss. This is why you need to know, all right, is the day rotational or is it directional? And then the potential, balance or imbalance. And I'm actually going to get more into that with an actual chart, but that's pretty basic. Like a balance is price balance right here. There's an imbalance, you're actually going to see price continue in whatever direction. If there's a balance, price is going to be accepted at that price level. Pretty basic, but I'll get more into that with actually showing a chart. Alright, imbalance, rejection, single prints, breakouts, gap open. This is going to be terms you're going to see when I actually pull up a chart. Balance, acceptance, wider POCs, rotation, overlapping value, open in range or in value. Different terms you're going to hear whenever you're talking about market profile. Single prints, which are pretty much just overlapping TPOs, motion levels, often at breakout levels. Initial balance extensions, buying tail, selling tail, extended VPOCs, poor low, poor high, one time framing. I'll get into more of this with actually showing a chart, but these are just some terms that it's like a different way of saying like breakout, support, resistance levels. It's just different names for that. So let's get into an actual chart now. Let's see. This is a market profile. BTC, BitMEX perpetual. The data I'm getting it is BitMEX. I don't, yeah, however you feel about BitMEX, that's you. It's working for me for right now. So I'm going to go into the previous day. This is current price on BTC, live right now. Woohoo! 56K. Whenever you see this, I hope we're at 47. Just kidding. Anyway, please don't get mad at anybody. This is your market profile chart. Yay, whoopee. We made it, guys. And this is something I was talking about that you can do with Excel charts. The reason why I sometimes don't look at candlestick charts very much is because one, I can do things like this on Excel. Oh my god, it's crazy, it's the same thing. No, don't worry about the colors. I just changed them because I like purple and white. Don't judge me. Yeah, the white is the bid, purple is the ask. The white go up, purple go down. Anyway. So this is the reason why I don't really look at a lot of times candlesticks, is because one, I can do that. Two, I can just do this. Each one of these is a day. It's a day. You zoom out, this chart just became a daily chart. Legit. Like this is, make this like this is a candlestick. And like this whole thing's a candlestick. It's a candlestick. It's a candlestick. It's a daily candlestick. Now, market profile chart typically are going to be broken down, are going to be in a 30-minute period. Like that's typically what every TPO is going to be, is a 30-minute period. Now you can do different periods. I stick to 30 minutes only because with 30 minutes I can hop on and like at any time frame evenly. I just acknowledge that I'm using 30 minutes. So 2 TPOs is an hour, 4 TPOs is 2 hours, math, so on, so on. So back to a TPO. On TPO, it's just another way of saying market profile, in case anybody didn't know. But this is the market profile. And this video is kind of long already, but I'm just going to be going over market profile. Matter of fact, I'm going to be turning off this, and I'm going to turn off this, and we're only going to look at market profile for right now. Alright, imbalance. That is different ways of just looking at what I was talking about. Is the market balanced or is the market imbalanced? So whenever you have a balanced market, you typically see something like this. This is usually a balanced market. Make this more days of TPO stacked in together, like this. Fancy, watch. Oh, fancy. Anyway, when you see this is pretty much prices being grouped in at this value. I just like touched this like y'all can see my hand. No, prices being grouped in at this value area right here. This is a very balanced day. Now an unbalanced day is gonna look like this. An imbalanced day, I should say. It's gonna look like this. More so, though, it's gonna look like these 2 days. This is what we call an imbalance. Why is it an imbalance? Because in our imbalance we have a lot of the market is moving very directional, I should say. At some point of the day the market moves very directional. Price is trying to figure out where is it going to be accepted at. Where does everybody want to buy? Where does everybody want to sell? And who's going to be the stronger? When it does find a good level where it's finding a lot of liquidity, who's going to be adding the most liquidity at that price level? Is it going to maintain? Is it already strong right there? Is there enough bids at this level? It's just looking, it's searching. In whatever direction there was the strongest imbalance before. Right here, obviously there is obviously a strong imbalance between the bids and the asks right there at that price level. And boom, we fall. Now with imbalances, the good thing about market profile, you get to see where these actual imbalances started. It's not just like a big wick. You get these things called single prints. Single prints are big boxes. I'm going to say this in like the simple man's term. They're big boxes that can act as resistance or support levels. The more grammatically correct term is this definition over here: overlapping TPOs, emotional levels, often at breakout levels, news events, economic releases, short covering endpoints serve as supports or resistance. So yeah, this is pretty much usually is whenever you see an explosive move to the downside or the upside. If you're looking at a candlestick, you're probably going to see a big wick. If you're looking at a TPO, you get single prints. It's usually a good bet when you get these single prints to place a trade right there above the single print with the stop loss above it. Of course, this is going to be a downside. That's why I say it like that. Now this one is going to the upside. So you go like, trade right here with stop loss below this. There it is. It's usually a good level to put, because that you had obviously a strong imbalance right there. So if price actually did go back down, to this level, you're probably going to see a lot of buyers step in right here, or there's still going to be not enough imbalance in the sellers to push past it. Now that's just assuming. It's an assumption. It don't mean it's gonna happen, but it's a safe bet that it will happen. And as you can see, put a line right here. Gonna make this area of interest. We haven't touched it yet. We came pretty close though. Look at that. Two, 3 ticks. Yes. 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 Okay, cool. We got like 3 ticks away from it. Yeah, so it's usually a safe bet when you get these single prints to place a trade right there. Initial balance. Extensions. You don't have to extend it. I just put extensions because you usually do extend it. Why do you extend it? Slap. Well, this is the reason why. Because intraday only. Not necessarily. Not necessarily the following day, but the initial balance intraday usually acts as a support or resistance level for that day. And what is the initial balance? Market open, first 2 hours. That's all it is. In those first 2 hours, the first hour. Wow. That is all the initial balance is. In the first hour, it's literally what price did. Like, this is my initial balance for the previous day. This is the initial balance for that day price. This is the initial balance. Now, is it necessarily going to happen? No. But at least earlier in that day, it's a safe bet. Does it always happen? No, look, it got rejected right here. But there is times, like if you merge this, let's say 30 days back, we haven't touched that initial balance yet. And then we have initial balance high, initial balance low. That's just the high of the IB, the low of the IB. Buying tails and selling tails. Huh. So this is like one of the coolest things that TPO's market profile charts has, other than single prints. I think single prints are pretty dope. But buying tails and selling tails, this is a sell tail, and this is a buy tail. So when you have an extension of TPOs at the extremity, this is the extremity points, extremity, not within the value area, all the way at the end, right here. So when you have an extended TPO to the upside or downside, you're going to get something. It has to be like, for me, I have 3 ticks. Oh my gosh. For me, I have 3 ticks. You can set this up like for 2 ticks if you want it. I don't. Or 4 ticks if you want to do something like that. I don't. But it'll literally, it's gonna print out something like this, and it's gonna show you, hey, bro, hey, short that. It's legit gonna just be like, hey, yo, everybody about to probably sell right here. What you doing? Now, that's not necessarily always going to happen, and a lot of times, especially when you first start trading market profiles, you're going to look at that and be like, I ain't going to touch that. You lying. But it usually respects it. It does. Sell tail. Price goes back down like vroom. Look at us. We out of there. Buy tail. Price to the dash to the upside like a vroom. Look at that. Crazy. You're only going to see that on market profile. I mean, you could set up there's different indicators that you could code and get something of the same nature. But this is like coded into market profile already, and it's just visibly pleasing to the eye, the human eye, ojo de humano, just to like it's literally telling you, hey, look, buy. And then when you put this into, let's say you're just not used to buying, like you're not used to this, and you're just used to candlesticks. Okay, I'm using XO, so I can do this. If you're not using XO and you're like using trading view, I'm just kidding. It's gonna look like this. It's a wick. But you saw this at I'm just saying, like you saw on a market profile, you saw this as a buying tail. Most people are looking at this like a lot of people they're too scared to buy the red. A lot of people are too scared to buy the red, especially if you're new to trading. It's really hard to buy the red. But if you see a buying tail come up, it's really telling you, hey, buy this, please. I want you to make money. Now, it's not always going to work. Let me see if I can find an example with it not working. So I'm not just like, oh, just wait for the buying tail just to end all be all. No. Yeah, this is a good. No, it's not. Let me find one. Actually, I'm not going to be able to find one from a historical day. The only time you'll probably find one is if like price is going down at an accelerated rate. There's just an accelerated imbalance in price, and that buying tail or that selling tail becomes a single print. So you usually kind of want to let it close first. Like for me, I would let the market like tell me what's like. Okay, is this going to be a buying tail or selling tail? When it's actually forming though, you might want to just like hold off a little bit. Wait for the next candle stick. I should say for people, candlestick. Me TPO, the next TPO. But a buying tail with a stop loss like 3 ticks above usually gives you pretty good profit. Selling tail, the same thing when you're a short seller. Nah, both. But it is what it is. And let's see what else. Volume points of control. Oh my gosh. It's just like I keep on saying it's just like my favorite. I guess volume points of control are my favorite because oh my gosh. Oh, they're so beautiful. So this is a volume point of control. I could always switch this. So you have points of control as a time point of control, and then you have a volume point of control. So the time point of control is going to be legit. It's going to show the same thing on this chart, on a market profile chart, just like this. How crazy, like it's going to show up like that, and then you have a volume point of control, which is going to be the same thing. The only difference is that this is what's time, like just a regular point of control is just how long time is spent in the price, and the volume point of control is how many people are spent at that price. And usually they go pretty hand in hand together. They usually will stack up the same. Because if there's price spent this much time at this price level, that means a lot of people are looking at that price level. So usually the volume point of control matches up with the point of control. For me though, I personally believe more in the volume point of control than the time point of control, just because I like to hop in with everybody. I don't like to just hop in with people for that day. Yeah, something like that. I think I explained that pretty good in a sense. But yeah, volume points of control. I'll probably do a little bit more on like a lot of these terms. Like volume point of control, I'm actually probably do a separate video for that. But volume points of control can be used as support and resistance or targets intraday. and I use them as targets intraday. But I'm gonna do a separate video on that. Poor highs, poor lows. You know that thing called a double bottom, double top? Yeah, that's poor highs and poor lows. That's all it is. Poor highs and poor lows. You'll see like something like something. Give me something. This one. Yes. This is a poor low. A little bit of a slippage of price. It's a wick. Tell you right now, that's a wick. Please be right. Yes, I was right. Anyway, so yeah. When you see something like this happen, when you see this candle close, like honestly, you could have played this so many times. Like this is 1, 2, 3, 4, 5, 6. So we had one touch right here, came up, made a little neck, back down, touch, math here. 3 hours later, another touch. We're not breaking it. Okay. You're nervous. It's okay. We come back up. He'll make money, but it's okay. Another touch. See, 1, 2, 3, 4, 5, 6. Another 3 hours. 6 hours, and we could not break this. Place your long stop loss below. I mean, you could. Okay, this is 2020 hindsight, of course. Stop loss right here. Tight stop loss. Looser stop loss right here. You have this single print right here, which is giving you like firm, like okay, there might be a reaction at this level, and price moves up. Same thing with like the same thing like a double bottom, double tops, and poor high is the same thing that I just showed you. It's just in the opposite direction. Now this is rare. Like it's rare seeing like 4 of these happen. 3, but I count this one. So when you see that, you kind of want to go ahead and hop on that like that, because usually you'll see like 1 or 2 of these, and they'll go back to point of control, and then they'll continue their way, continue their business. It might not hold if it keeps on touching it. It keeps on playing at this price level, because there's going to eventually probably be an imbalance. But there was an imbalance. Bidder said, "Come on, let's go to the moon," and we tried it. We tried it. Alright, a couple more terms. One time framing. Power value area, adoption process. I'm gonna just go over one time framing, and I'm gonna talk about value areas in a separate video, because we have several questions about that in the Discord. So one time framing. What is one time framing? If you ever see price moving up consistently, whatever time period you're trading, whether that be 15 minute, 30 minute, hour, 2 hour, 4 hour, when you see price every time frame move up, it tells you something. It tells you people want to go that way. Not necessarily, but whenever you see like 3 in a row, 4 in a row, going in one direction, okay, you start to, okay, there's something that's probably going on. And let's see if I can find a good example of this. Yeah, I can use this one. It's not my favorite, but this is being a good example of one time framing, because we didn't really, there was definitely some big support right here at this level. You came up one time frame, 1, 2, 3, 4. When you start seeing that, by that time you might be a little nervous, but boom, then we get that explosion. One thing I will say, when you see one time framing, You usually don't want to trade the opposite direction unless it's actually at a resistance level. Like even this, like this is, like yeah, this is still technically one time framing, and I would only short up here at the resistance level. But when we see one time framing, you usually want to go with that trend. That's usually telling you it's a good bet. It's a good bet. And I say like three or four periods of consistent movement to a single direction. And let's see if I can find a better one. Ooh, this is a good example of it getting rejected. Actually, no. Yep. Let me find one. Let me see if I can find one to the downside. Oh my gosh. Let's see if we get one to the downside. Yep, there it is. This is something that also usually happens whenever we get one time framing. 1, 2, 3, 4, and then it continues 5, 6, and it's just consistently going down. When you see this, hey, you might want to hop into that. I wouldn't be long in here. Definitely would not be long in here. Because usually when you start seeing one time framing, that's a slow imbalance in price. That means there's consistent selling or consistent buying in whichever direction, which usually leads at some point to a pretty hefty imbalance, which is when you get things like the single prints to the downside, and that's one time framing. One time framing though. But yeah, that's pretty much it for this video. Next video I'll be going over probably some more things. It's gonna be like a series of things I'm gonna go over for techniques. Our Discord, and anyone else who wants to look at this video can get some insight into market profile in the crypto world, because there is nothing talking about crypto.